Hello friends, welcome to my channel MN Coaching Center. So today I'm going to explain our accounting started accounts part 2, that is principles and practice of accounting, 4th chapter, subsidiary books. So in principal books you learn about ledger, cash book, and in subsidiary books you will learn purchases and sales book, purchase and sales return book, bill payable and bill receivable books, journal proper, these things. So by introduction, let us start this chapter, the subsidiary books. So introduction. So in any business, whether there may be small or small scale business or long scale business, in every business, the most of the transactions most of the transaction happens in that business. They are related to the receipts and payments of cash. Receipts, they are related to receipts, payments of cash. Sales of goods, they are related to their sales of their goods, and they are related to their purchases, what you purchase to it is related. So it is convenient, it is very much easy to keep a separate register. It is very easy to keep separate register for each transaction, each such class of transaction. On one for receipt, it has a separate book, one for receipt and another for payment of cash, and one for purchase of goods and one for sales of goods. If you keep separate books, you will know which easily that this is the sales of goods we have done, this is purchase of goods we have done. So a register of this type, a register that you make this type is called a book of original entry. It is called a book of original entry, or of prime entry, or of book of prime entry. It is called the register. For transactions recorded in such books, the transactions that are recorded in such books, there will be no journal entry. So for the transaction there will be no journal entry. The system by which transactions of a class are first recorded in the book, the system by which the transaction is recorded in the book, especially that book is meant for the writing of the transaction, and on the basis of which ledger account are then prepared. On the basis of this, ledger account is prepared, and ledger account are then prepared, and this ledger account is known as the practical system of bookkeeping. So this ledger account is known as the practical system of bookkeeping, or even the English system. It is also known as English system. So we should note that in this system, in this practical system of bookkeeping, or in English system, there is no departure from the rules of the double entry. So there is no departure from the rules of the double entries. So the books of these books of original or prime entry are also called subsidiary books. So these books are called as prime entry, or also it is called as subsidiary books. Since ledger account are prepared on their basis, since ledger account is prepared on the basis of this book, and without the further process of ledger posting, without this process of ledger posting, a trial balance cannot be taken out. So a trial balance cannot be taken out without this preparation of ledger posting. You cannot take the trial balance out. Normally there are some of the following rules for subsidiary books, like for making of subsidiary books. Like first is cash book, that is to record receipts and payment of cash, and including receipts, intro and payment out of the bank. So first is you have to take cash book, where you have to record the receipts and payment of cash, and also you should include the receipts into and payment out of the bank, what all the payment out of the bank have gone, that also you should write in this cash book. Next is purchase book. Purchase book that you are taking is to record credit purchases of the goods. So what it is, the purchase book is for recording what all the credit purchase you have made for that goods. in or of the materials and stores required in the factories, or the material and stores that are required for you in the factories. For that all this purchase book is meant. Next, purchase return books. So purchase returns books is to record the return of the goods. Return books, it helps you to record the returns of the goods, helps you to know about the record of what all the return of the goods you have done, and material previously, what all the material you have purchased before. In that, by when you buy, if you buy a goods, you will write this much goods you have buy, you have buy that this much goods. So in that purchase return book, you will write, you have written, you will see in the purchase book what all the goods you have buy, so that you will see, you will calculate this much goods I am sending, you should give me this much money, so this much you will understand. Next is sales book. So sales book is to record sales of goods dealt in by the firm. So sales book is to record the sales of the goods. It is sales book is for the recording of the sales of the goods. You have to record all the sales of the goods. Sales return book is to record the returns made by the customer. So sales return book, what all sales return book is? Sales return book is to record the returns made by the customers. So the returns, sales return book is helps you to record the what all the returns that are made by the customers. Returns that are made by the customers. There, to know that, you will use the sales returns book. Next, bill receivable book. So bill receivable book you will use to know the record bills receivable books to record the receipts of promissory notes or hands from various parties. So bills receivable book, this will help you to record the receipts. It will help you to record the receipts of promissory notes. What all the information you need about that receipt, to information it will be containing, or hints from various parties, or know it from the various people. Next is bills payable book. Bills payable book is to record the issue of the promissory notes. It is helps you to record the issues of promissory notes. What all the issue you have got in this promissory notes, that issue you have to record it. The bills payable book is helpful, and also it is helps you to unite the units the other party. Next is journal. So it is proper. Journal means proper to record the transaction. It helps you to record the transaction which cannot be recorded in any of the 7 books. So in any of the 7 books, it is 7 books that are mentioned here: the cash book, purchase book, purchase return book, sales book, sales return books, bill receivable books. Any of these 7 books, if you are not unable to write these transactions, you can write this transaction in this journal. In this journal you can write the transaction if you are unable to write any of these transaction in any of these books. We noted that in all above cases the word journal may be used for the work book. So only journal can be used for the work book. Next, advantages of subsidiary books. The advantages of your subsidiary book is division of work. It helps in the division of the work, the subsidiary book, because since in the place of one journal there will be so many subsidiary books. So since in place of one journal you will having 7 subsidiary books, so the accounting work may be divided amongst a number of clerks. So among the number of clerks that are available in your company. Among them you can divide the 7 books, because you does not want only journal, because only one book you does not have. So you have 7 books, so you can divide it to their clerks available in your company, so that it will be easy for them also, and easy for you to check, and easy for accountant also. Next, specialization of efficiency. So, specialization of the efficiency means when the same work is allotted to a particular person. When you allot the same work for a person for a period of time, you will allot him some work. He acquires full knowledge of it. He acquires all the knowledge of that work, what he need, and becomes efficient in handling it. As you give him that work, he becomes very known about that work, and becomes efficient in handling it. He will become efficient in handling it. Thus, the accounting work will be done efficiently, so that the accounting work will be done efficiently, easily, because they will be known, get knowledge, and very much easy to handle it. Savings of the time. Various accounting processes can be undertaken simultaneously because of use of number of books. So because of use of the 7 books, it will save your time, as you use which book you need, and it will helps you to understand, means it will helps you to save your time, save your time and it will being completely very fastly. This work will be completed. So it will subsidiary book, it will helps you in saving your time. After this is the availability of information. Since a separate register or book is kept, it is kept for each class of transaction. So since a separate register or book is kept for each class of transaction, the information is related to each transaction will be available to one people. The information that is related to each transaction, it will be available at only one place, as it has given the information is given for only one person. So thereby the available of information will be in only one place. Okay, so you can easily access the information that you need for that work what you are doing. Facility. Next is facility in checking. So when the trial balance does not agree, when your trial balance it does not agree, the location of the errors is facilitated by the existence of separate book. So when you do your trial sheet, when it does not agree, you can locate the errors, or errors is facilitated by separate books. So in separate book you can locate the errors, and you balance the balance the trial balance. Even the commission of errors and frauds will be checked by the use of subsidiary book. So by the use of subsidiary book, you will check whether anything is wrong, or anything errors or quitting, or anything fraud has been done. You will know by this subsidiary book. So it has subsidiary books, helps in it helps in checking it helps in checking the books, checking what all you need. Next is distinction between subsidiary books and principal books. The book in which transactions are first recorded to enable processing are called subsidiary books. So the books in which transactions are first recorded or to enable processing is called subsidiary book, where you first record transaction and enable it for going ahead. The ledger and the cash book are the principal books. The ledger and cash book, it comes under the principal books, since they give some of the information of preparation of trial balance and financial statement. For preparation of trial balance and financial statement, the ledger and cash book gives information, so it comes under the principal book. Next, in the following table that are given in the next, it will help you to in understanding the difference between subsidiary book and the principal book. So it will help you in understanding the difference between the subsidiary book and the principal book. So now let us know what is the difference between the subsidiary book and the principal book. So yeah, as you can see, here is the principal book. It has financial books, cash books, and subsidiary book. And in principal book, you can see the ledger. The ledger comes under principal book. Next, cash books. Cash books are there are four cash books. One is simple cash book. Next is cash book with discount column. Next is cash book with bank and discount column. Next is petty cash book. These are the four cash books. And financial book is considered with subsidiary book. So subsidiary book, purchase book, that is for credit purchase. Sales book, that is for credit sales. Purchase return book for credit purchase returns. Sales return book, that is for credit sales return. Bill receivable book, that is for bills receivable, means bills received. And next is bill payable book, that is for bills accepted. Journal, that is to record the transaction, for a record of transactions not recorded elsewhere, where the transaction is not recorded, to record the transaction. The journal paper is used. These are the books that are you have to know. So these are the ledger, simple cash book, cash discount book. So these four books are the cash book. Simple cash book, you should have a discount column in that. Cash book, where you should have bank and discount column, how much money from bank. And petty cash book. In purchase book, you have to write for credit purchase, what all the credit purchase you have done, for that you have to write in purchase book. Sales book, what all credit sales you have done, sales of the goods you have done, you have to write. Purchase return book, you have to write credit purchase return, what all you have purchased by giving the money, by earning money, what all you purchase, you have to write what all you have product you have purchased, and you have given it return to the company from where you have purchased this. You have to write it in the purchase return book. Sales return book, you have to write what all the returns from happened from the sales. Next, from bill receivable, what all the receivable bill received, bills you will accepted, these all the things. Now first is purchases book. So to record the credit purchase of goods dealt in or materials and stores used in the factories, you have to record the credit purchase of goods dealt in or materials and stores or that are used in the factories. A separate register called the purchase book or the purchase journal, in that you have to write, and is usually maintained by firms. And this purchase book and purchase journal, it is usually maintained by a big company, big firms. They use it and they maintain it. So the ruling is, so they have given below this like this only. Yeah, the purchase book also has date, particulars, LF, details, amount. Same. Everything is same. How you learned about in the different book. In the last previous chapters, have you learned this? The ruling, it is same. So it should be remain that you should remain that cash purchases are not entered in this book. In this book you should not enter the cash purchased, since these will be entered in the cash book. So cash purchases you should not enter in this purchase book, because cash purchases you should enter it in the cash book, in the book for cash what you have done, the book separately. In that you have to enter the cash purchases. Not, you should not enter the cash purchase in this purchase books. After this, credit purchases of things other than goods or material, such as office furniture or typewriters or journalized, they also are not entered in these purchase books. So what are the purchases of things leaving the goods and material? goods and material, what all the purchases you have done, purchases of material you have done, like furnitures for the office or typewriters, they should be written, means they also or not should be, they should not be entered in this purchase book. Leaving credit purchases, means purchase of the goods or materials, leaving that these such things like furnitures for the office or typewriters, it should not be entered in the purchase books. Next is, see here, so the particular columns is meant to record the name of the supplier. So the columns that are made here is, it helps you to record the name of the supplier and name, and also it helps you to enter the name of the articles purchased. What are the name, the column, the particulars, this column, it will help you to write the name, their name, company name, or who has buy that product or thing, to write their name. This particular column is helpful for you. You should not write any other thing in that. You should write only the name of the person or the name of the company, or the name of the supplier, or the name of the person who has buy that product, who has purchased that product, and the respected quantity also you have to write. Like if a supplier has came and he has given the goods to you, so you have to write his name, how much quantity of goods he gave to you, to your company, and you have to write. Or if you sell the goods, then how much quantity, like that you have to write, and the amount in respect of each article is entered in details column. So how much amount it will happen to buying that goods or selling that goods, how much amount will be happen, how much amount is it is, you have to that you will write it in your details here in this fourth column details. In that you will write this much amount, 1 lakh is happened, by giving 1 lakh we have buy this much of product from this person. Here in particular you will write from this person quantity. In details you will write how much amount you have, by giving how much amount you have by that product. Next, after totaling the various amounts including a single purchase, the amount for packing and other charges is added, and the amount for trade discount is deducted. So after you total, means they will give one by one the calculation how much amount to give them, you will calculate one by one. So one by one the product amounts, when you calculate wholesale, they will give the product, but you have to calculate one by one, this much product, this much amount. When you calculate it, and single purchase charge, when you put the packing charge for it, or many other charges when you add, and the discount for trade, when you trade discount, when you deduct the amount you get, you should pay. The net amount is entered in the extreme right hand column, and the total in this column shows the total purchase made in a period. So after this, the net amount should be entered in the extreme right hand column, and the total amount will be made in this. We will know what all the total in this the total in these columns. So it will tell you what all the total purchase you have made in a period. Next illustration one is the rough books of Mr. Narain and Corporation. They have purchased some of the rough book. So they have purchased some of the rough book, and they have given information to us. Now on 2020 February, the year 2020, month of February, they have done this. Like first one is purchase from Brown and Corporation on credit. They have purchased 5 gross pencil for rupees 100 per gross, and 1 gross register at rupees 240 per dose. They have purchased these goods first, and they have minus trade discount. They have given 10%. 10% trade discount they have given. The second purchase they have done is purchase for cash from the stationery mart. From the nearby stationery mart, they have purchased a good for cash. Like they have purchased 10 gross exercise books and 300 per dose. Per dose, they are 300 rupees is the money for that book. Purchase computer for office use for from Mr. Office. So they have purchased a computer on credit for rupees 30,000. They have purchased the computer. This is your third question they have given. Fourth question they have given is purchased on credit from the paper corporation. From the paper corporation, you have purchased for credit something like 5 reams of white paper at the rate of rupees 100 per ream. At the rupees of 100 per ream you have purchased, and 10 reams of ruled paper at the rupees of 150 per ream you have purchased. Total discount they are giving for these both purchases is 10% discount they are giving to you. Okay, this is our fourth question they have given. Fifth one is purchases on one dose gel pens. One dose gel pen at rupees 15 each. Rupees 15 each from Mr. Verma Bros on credit. So we have to make out the purchase book of Mr. Narayan and Corporation. So Mr. Narayan and Corporation, whatever purchase they have done means their purchase book we have to make. So what are the things they have purchased? First, see, in this they have purchased no see first in February 1st means first in February they have first thing they have done is they have purchased from Mrs. Brown and Corporation. They have purchased 5 cross pencil for rupees 100 per cross. Means one cross pencil is 500. 5 cross pencils means 500. So in rupees column you have to write 500. Next, one cross pencil registered 240. So 240 per dose. Per dose means you will take each dose how much 12 will come out like that. Then also 14 like that, 14 cross pencil you have done. So 288. 2880. When you do 2880 plus 500 you will get 3380. In the 10% discount means 338 discount. Okay, this is our first. And second is they have asked 10 cross pencils 300, so therefore 3042 is the amount here you will get. Minusing 3380 minus 338, total amount you will have to pay for them is 3042. Next, fourth one is the paper corporation. We have bought 5 reams white paper for rupees 100 per ream. 100 per ream, 5 means 500. Okay, 10 reams while per ream is 150, so 1500. So the 500, 1500, 10 minus means 200. So 2000 minus 200, 1800. So 1800 is the amount you have to pay for the paper corporation for buying the reams paper. White paper reams, ruled paper reams. For buying that you have to pay 1800 for them you have paid. Okay, in next in Mrs. Verma Bros for by them you have pay buy one dose gel pen at rupees 15. Here we are taking this because here they have given 300 means it you will know it is 3000. Okay, 3000 per. In third question, purchase of computer 30,000. It you should not calculate that. Bottom purchase you have done means that you have to calculate this. Here you have to calculate only that much you have to take. Means here 5 here they have given 5 cross pencils at rupees 100 like this. Here they have given like this questions only you have to take. Here this question, third question, it is easy because they have given there only 30,000 you have paid. Here only one question they have asked, so that is 3000 you will know, you will leave that. So Mrs. Pharma Pro, so one dose gel pen is 15, here rupees 15 each, so one dose means 12. So 180 rupees total. Okay, one dose means 12 will be there. 12 into 15, 180. So total is 180. So 180 only will pay, because they will not give any discount. Any discount they have not offered here. Here in these two questions they have offered discount. Okay, and here the total amount that is for this, for our Mr. Oh, 1 minute, sorry. For Miss Narain and Corporation, the total amount they have to pay from this is 5,022 rupees is the total amount. You have to note that purchases of cash and purchases of computer cannot be entered in the purchase book. So you should note that purchases of cash. Here they are in the second question, they have purchased the cash. Purchases of cash and purchase of computer should not and cannot be entered in your purchases book. Okay, this is the note, you have to understand it. Okay, next is illustration 2. They have given is here we have to enter the following transactions in the purchase book, and then we have to push them into the ledger book. So in April 2020, in April 4th, a company, let us take a company, it has purchased from another company, that name is Ajay Enterprise, that is in Delhi. It has purchased 100 dose Rexona Hawaii Chappal, that is for rupees 120 per dose 120 rupees. So, and also it has purchased 200 dose of bulky leather chappal, 200 dose of bulky leather chappal, that is 300 rupees per dose, and they have offered rate discount of rupees, sorry, offered the 10%, and they have made some freight charge, they have asked for rupees 150. In April 15th, our company they have purchased another goods, some more goods from Balaji Traders, that is in Delhi. So our company has purchased 50 dose Mac shoes, that is at the rate of rupees 400 per dose we have purchased, and 100 pairs of sports shoes rupees 140 per pair we have purchased from the Balaji Traders, and they have given a discount of rupees, so at the rate 10% discount they have given to us, and freight charge they have taken 200. Next is April 28th. We have purchased from another company, that is from Tripti Industries, that is in Bahadurgarh. We have purchased 40 pairs of leather shoes for the rate of rupees 400 per pair, and 100 dose of Rosie Hawaii Chappal at the rupees of 180 per dose. So the trade discount is they have given a 10% of discount, and they have put 100% freight charge on that. Now we have to make the purchase book for this questions they have given. Now purchase book, that is date, participants, gross amount, trade discount, net price, freight charges, total amount. Okay, so the date first you have to write April 4th. The first on April 4th you have buy product from Ajay Enterprise. The first product that I have bought from Ajay Enterprise is 100 dose of chappal at rupees 120 per dose, minus 12,000 they have to. So therefore it will be 12 dose of 120. So this we have to minus. Next is 200 dose of bulky leather chappal of rupees 300 per dose, minus 60,000. Total the total will be 72,000 gross amount. The trade discount they have offered is 10%. So 7,200 is the trade discount you are giving. The total net price is 64,800, and the freight price they are asking is 150 rupees. So therefore you are giving 64,000. Total amount that you are giving to Ajay Enterprise is 64,950. The next question they are asking is, in April 15, on another April 15, another company, that is Balaji Traders, that is in Delhi, you asked them, you have buy 50 doses of Max shoes, you have buy from them. So 50 dose means 5 for that, so therefore it will be 20,000, it will be total. And another product that you have buy from them is 100 pair of sport shoes. 100 pair of sport shoes, 140 per pair. So therefore it will be 140 into 100, 14,000. The trade discount is 10%. So the total amount is 34,000, and the discount they are offering is 3,400. So therefore it will be 30,600 is the amount, plus the freight amount that you have to pay for transport of goods or anything is 200. Therefore 30,800 is the total amount you are paying to them. The another next company is on April 28th from Tripti Industry, that is in Bahadurgarh, that is located in Bahadurgarh. From them you have purchased 40 pairs of leather shoes. You have purchased 40 pairs of leather shoes for rupees 400 per pair. So for the 16,000 is the total amount that is the amount for that 40 pairs of leather shoe you are paying total. Next is 100 dose Rosy Hawaii Chappal you have buy from them at rupees 180. So 180 into 1, so 18,000. So 18,000, 16,000, 34,000 is the total amount again. And discount is 10%. So therefore 3,400 is the discount, and 30,600 is the total amount. So in that 100 is the they are giving us, we have to give us freight amount. So therefore transport freight. So therefore 30,700 is the total amount you have to pay to the Tripti Industries. So now if you do total, the gross amount is 1,40,000 US, the gross amount. In that what you have to do is in that trade discount that they are giving is 14,000 rupees. They are giving that discount. Okay, total discount here in 1,40,000, 14,000 they are giving as discount, as you are getting the trade discount in that. In that, if you minus 1,40,000 to 1,14,000, if you minus 1,40,000 minus 14,000, it will be 1,26,000, and therefore 450 is the amount you are paying for them as the trade for trade. So if you do total, you will get here 1,26,457 rupees is total amount you are paying to them. Next, ledgers, how you have to put is for purchase account. First, debit side, what you will write, what all the debit you are given, first there you will write purchase account. Debit side 2020 April 30, on April 30, to account as per purchase book. So to account as per the purchase of that book, you have debited 1,26,000 you have debited. Next is debited on 2020, again the ledger April 30, on April 30, again you have to write the amount as per purchase book. As per purchase book, the amount you are debiting is 450 for your freight, for the freight amount. from the freight trains bringing the products what you want. Next is Ajay Enterprise. You are giving credit is date 2020 April 30. Your by purchasing account 64,800 is credited, and for by freight account 150 rupees is credited. Next, for Balaji Trades, what you have done in 2020 April 15, by purchasing account 30,600 is credited to them, and by freight account 200 rupees is credited to them. Next, Tripati Industries, for them by on to April 28 2020, by purchasing account 30,600 is credited, by freight account 100 rupees is credited. So this is the ledger you have to write to this like this. You have to write the ledger. This is the example they have given how to write the ledger. Next is posting the purchase book. The purchase book shows the name of the parties from whom goods have been purchased on credit. So this purchase book that you write that you do in the accounting, the purchase book, it tells you the name of the person, the company from whom you have brought the goods, from whom the goods have been purchased on credit, from whom, from which company or from which person you have purchased the goods on credit. This purchase book will give the information to you. And these parties are now trade payables, and these purchase book, these parties, they are now trade payables, they are now easily trade payables, they are okay, and their account have to be credited for the respective amount shown in the purchase book. So from their account you should have been credited the respective amount, how much amount they have shown in the purchase book, that amount only should be credited to their account, what account they have in which bank, in that bank, only that much amount to their account only should be credited, okay. And the total of the amount column shows the total purchase made in the period. Next, in the total amount, the total amount column, the total of the amount column, it shows you the total purchases what they have done in that period, in that 1 month, 1 week, 1 month, 1 year, in that period what all the purchases they have done. That purchase information, this total of the column, amount column, will give you, and also total purchases of information it will give you, okay. Next is the amount is debited to the purchase account. Next, the amount by it will be debited to purchase account to indicate receipts of goods. To indicate that it is the receipt of goods, that you for good, by selling the goods you get that money, it will be debited to the purchase account, so that you will get the receipt that you are from the buying or selling of the goods you have earned that money, okay. In illustration 1, the purchase account is debited at rupees 5022. So in the first illustration you have learned, in that the debit is happened is rupees 5022 from, and Mr. Brown and Corporation, that company, they have credited of rupees 3042 is the amount, 42 rupees is the amount they have credited. Next, in the next question is they have given the paper company, they have credited 1800, and the Mr. Once Pros, they have 180, okay. The total of the amount put on the credit side should be equal to the debit side. So the total amount that is on the credit side, it should be correctly equal to the debit side. There should be no change in that. Thus the double entry is completed. When the amount of the credit side is equal to the amount of debit side, at that time the double entry is completed. If it is not equal, then you have to check the errors in the error book or separate book. Errors, what all happened, you have to trial balance, then you have to, if it get balance, then you have to complete that double entry, otherwise it is not completed still, okay. Sales book. Next topic is sales book. The sales book is a register specially kept to record credit sales of goods dealt in by the firm. So the sales book, it is a register specially kept to record credit sales of the goods. So it is specially to record the credit sale of the goods. To record the credit sale of the goods, the sales book has been kept. Next is cash sales are entered in the cash book. So in the cash book you will enter the cash sale and not in the sales book. Not in the sales book you will enter the cash sale. You have to enter the cash sale in sales book only. Credit sales of things other than the goods dealt in by the firm are not entered in the sales book. So other than the goods sales, leaving that any other entries you should not do in the sales book. You should not enter it in the sales book. Only the entry what all the sales happened to the goods, only that information, that amount to whom you have purchased, only that information you should enter in the, you should write in the sales book. Leaving that, you should not write any other books like purchase books, amount in this, you should not do anything like that. And the ruling is the same for the purchase book. So the ruling is the same for the purchase books, like this only. It will be see here, this ruling, it is same, date, particulars, details, LF, amount, this all the same thing, no changes will be there. In the sales book also it is same, no difference, no changes, you can see. Okay, next is, so entries in the sales book are also made in the same manner as the purchase book. So how you do the entries in the purchase book in the same manner, you have to do the entries in the sales book also. And the particulars columns with record the name of the customer. So as you know, there will be same, you have to write in the particular column, you have to write same customer name and quantity of the goods that are sold to that customer, and what are the each items you have sold to that customer, the amount for which you have sold, for how much amount you have sold that customer, you have to write in the details. And after totaling the amounts for one sale, charges for packing and many other things, you should add it to the trade discount. If any deduction is there, then you should do the deduction, and the net amount is you have to put into the outer column. The total of the column of this column will show the total credit sales for that period. Next, another illustration they have given that in the following question they have given transaction of Mr. Kishore and Sons in the year 2020. As per the waste books, make out their sales book. So from the waste book we have to make out their sales book. So they have first sold to Mr. Gupta and Verma on credit. So Mr. Gupta and Verma company, to them they sold 30 shirts at the rupees 800 per shirt they have sold, and 20 trousers they have sold at rupees 1000 per trouser, and the discount they have given is 10%. 10% is the total discount they have given. Next, another they have sold furniture to Mr. Segal and Corporation on credit rupees 800, and they also sold 50 shades of to Mr. Jain and Sons at rupees 800 per shade. Sold 13 shirts to cheap stores like 780 rupees per shirt rupees is, and they sold on credit of rupees credit to Mr. Mathur and Jain of 100 shirts at rupees 750 per shirt, 100 overcoats at rupees 5000 per overcoat, and trade percent is 10% is the trade discount they have given. Next, in date 2020 particular, so Mr. Gupta and Verma, 30 shirts they are at the rupees 800, 20 trousers at the rupees 1000, so 13 to 8, 24,000, 20 trousers 20,000, 44,000, in that 4,400 is the trade discount they are giving. So 400, 4,000 is the minus, so therefore 39,600 is the total amount they have to pay to the Mr. Gupta and Verma had to pay to them. Next is Mr. Jain and Sons, 50 shirts at rupees 800, so 5 it's a 40, so 40,000 they have to pay total amount. Next, Mr. Mathur and Jain 100 shade of rupees 750, so 75,000. 10 overcoats 5,000, so 50,000. So therefore 1 lakh 25,000. In that 12,500 is the minus. So therefore 1,12,500 is the total amount Mr. Mathur and Jain has to pay to them. Totally 1,92,000 is the amount they have to write in the sales goods. This is the sales goods. Next, posting the sales goods. The name appearing in the sales book or of those parties which have received the goods. So the name that you are seeing in the sales book, they are the name of the parties or the persons who have received the goods, that we have sent from here. The account of the parties have to be debited with the respective amount. The company account should be debited this much amount. And the total of the sales book shows the credit sales made during the period concerned. During that period they have given. In that period they have to their sales book. They have to show the credit sales that we have given credit sale to this company, and the amount is credited to sales account. Then the amount is come to the sales account. In illustration that they have given is, in that 1,92,100 is credited to the sales account. To sales account 1,92,000 rupees has came to sales account, and 39,600 rupees is credited to Mr. Gupta and Verma's account, and 40,000 is to Mr. Jain and Sons. 1,12,500 is to Mr. Mathur and Jain. These are the amount that you have to put on the credit side and is equal to the total of the amount put in the debit side. So amount credit and debit should be total, and then if you entry principle is followed correctly, you have followed the double entry principles, means you have to close that account, means you have to close that sales debit and credit side, means sales are booked, you have to close that sales book. Next, sales return book or return inward book. So if customers frequently return the goods sold to them, if a customer who buy the good from them, if he frequently, continuously in an year, if he continuously returns the goods to them, it would be convenient to record the returns in a separate book. So it is they want to write that record in a separate book. It will make easy to them to understand how much the customer has returned, how much we have, how much he has returned, and how much we gave to them. It will be easy to find out. So that is the separate book in which you will write about the information of what all the goods customer has returned. That is the sales return book you have to say, or return inward book also you can say. And the ruling of the book is similar to the purchase or the sales book. So the rules, they are similar to the sales book and purchase book, the rules that you have. Book and entries are also made in the same manner. So in book and entries, they both are also in the same manner. In illustration, so written inward book here in illustration is there. So on a date June 7, 2020, Sunil Bank and Corporation, they have paid 6 copies of double entry bookkeeping and TS as rupees 7. So 6 7 42, so 42 in that 4.20 is their discount, so 37.80 they have to pay. And 1 copy business method by R.K. Gupta. So 1 copy they have written, so 3.50 is the price they have, another they have paid. So therefore it will be 41.30 is the total amount that you have to put in that. Next is purchase return or return outward book. So a book that is conveniently record the return of goods or material purchased to the supplier or any other information. The returns are not frequent. A book where you will write the return of the goods, but that return information is not frequent. It means the return is not frequent. They will return in like 1 month, 2 months, like that. Sak. Mm. So as you can see, the written outward book, it will be like this. So on date 2020 June 2nd, a Premier Electric Corporation 136 Usha ceiling fan. So they have to pay 175 rupees. Mohan Electric Corporation, they have taken 10 iron heaters, total 150. That discount is 10%, so therefore it will be minus 15 rupees. So therefore 135 rupees totally they have to pay 310 rupees. So posting of the return book. So the sales return book will show the total of the returns made by the customer. So the sales return books will show you the what all the total amount the customer has returned to you. Really the amount of the returns is in reduction of the sales. Really the amount that here the customer has returned, is it in the book of reduction of the sales properly. Therefore the amount may be debited to the sales account. To the sales account the amount may be debited, but usually a separate account that is called return inward account is opened. For that a separate account, the returns inward account is open, and the total of the sales returns is debited to this account. So the total of sales return account is debited to this account. The customer who have returned the goods are credited with the respective amounts. The customer who have returned the goods are credited with this respective amount, what they have to pay they have taken. So it should be noted that on goods being received and accepted back from the customer, the goods they are being received and accepted from the customer, a credit note is issued to the customer concerned. So to that customer a credit note is issued. This shows that the amount of to be credited to the customer's account. The amount should be credited to the customer's account. This information tells us. Now, it should be noted that on goods being received and accepted back from the customer, a credit note is issued to the customer concerned. This shows the amount to be credited to the customer's account. So, when you take the goods, receive the goods from the customer, when you accept the goods from the customer, you should make a credit note that is issued by the customers, so that you can know the how much should be the amount to be credited to customer's account, how much amount should be credited. To know that, you should be issued the credit note to be customers. Similarly, when the goods are returned to suppliers, they will issue the necessary credit note. Also, the firm returning the goods will issue the debit note to the supplier, indicating the amount for which the supplier is liable to account of the return. So similarly, like that, when you receive the goods, you will take the credit note to that customer. Similarly, when send a debit note to that, he will give the credit note issued to the customer. Issued to the customer. Like that only, when the goods are returned to supplier, when you return that goods to supplier, they will issue you some of the necessary credit note to you. Also, while returning that goods, they will issue you some of the debit notes to the supplier. To the supplier, will issue some of the debit notes, and the supplier will issue you some of the credit notes, indicating the amount for which the supplier is liable. The amount for which supplier is liable, it will be indicating that amount. The total of returns outwards book shows the total return made. The amount can be credited to the purchase account, but in practical is credited to a separate account called purchase return or return outward account. The supplier whose name appears in the book have received the goods, so their account have to be debited. They have given the illustration below. So the total of the return outward book shows the total returns made. The return outward book, in that you will be having what all the returns you have made in that day or in that month or in that year. So the amount can be credited to the purchase account, but in practice it is credited to a separate account. in practice you have to credit it to a separate account that is called as purchase return or returns outward account. The supplier whose name is in the books have received that goods, the name the person who received that goods, so their account have to be debited. So his account have to be debited, the amount has to be debited. Like see, November 20th, Rajendra Prakash and Sons on 136 Usha selling fan, their rate discount is 10%. So they have given 36 means 200, so detail 200 in that 10% means 20 rupees minus, so therefore 180. And Modern Electric Company, they have given 100 rupees, so totally 280 rupees is the amount you have to return outward. Like that only you have to make the ledger. Date November 20, the return outward account, the amount you have to return is debit is 180 rupees from Rajendra Prakash and Sons. Similarly, Modern Electric Corporation, November 30, so they have to return is 100 rupees they have to return. Like that only return outward account by Surendra as per returns outward account, so you have to credit the amount is 280 rupees is the total amount you have to get credited in your bank account. So bills receivable books and bills payable books. So bills receivable books and bills payable books, these are the two books. If the firm usually receives a number of promissory notes or hands, it would be convenient to record the transaction in a separate book called bills receivable book. So if a firm or if a company, if it receives a number of promissory notes, or if it will be convenient to record the transaction in a separate book. So it will be convenient for the customer company to record the customer's information in a separate book, and that separate book is called as what is receives is bills receivable book. Similarly, if a promissory notes or hints are frequently issued, the bills payable book will be convenient. So if we issue the amount what they have to pay frequently, what all the amount the customer have to pay if issue, it is called as the bill payable book, we say. Next is important for journal. What are the important things you have to know about the journal is cash transactions are recorded in the cash book. So you record the cash transaction in your cash book. Okay. Next, credit purchase of goods or materials are recorded in the purchase book. In the purchase book, you record the credit purchase of goods or material. Purchase of goods or material you will write in the credit purchase in the purchase book. Okay. Credit sales of goods you will record in the sales goods book. Return from the customers that you will write in the sales return book, and return to supplier that you will enter in the purchase returns book. Okay. So let us go a little bit forward. So bill transactions are entered in the bill receivable books or bill payable books. So what all the transactions that happen through bills are written in the bill receivable books or bill payable books. If these bill receivable or bill payable books, they are maintained apart from the transaction mentioned above. They are mentioned above. If they maintain the bill receivable or bill payable books, there are some entries also which have to be recorded. Apart from doing transaction entries, what all the transactions happened, their entries are doing their entries. Apart from that, there is some entries that also have to be recorded in the bill payables or bill receivable books. For them, the proper place is the journal. So for writing that entries, for recording that entries, the proper correct place is the journal. In fact, if there is no special book meant to record a transaction, in case if there is no a special book meant for record the transaction, it is recorded in the journal. In the journal you will record the transaction very properly. The role of the journal is thus restricted to the following types of entries. For the following types of some entries, the journal is still restricted. They are the first one is the opening entries, next is closing entries, next is rectification entries, transfer entries, adjusting entries, and entries on dishonor of bills and miscellaneous entries. Let us learn about these entries one by one. So opening entries Opening entries means when books are started for the new year, the opening balance of the assets and liabilities are journalized. So opening entries means when you start the books, means when you start reading the accounting in the books in the new year, the opening balance of the assets and liabilities are journalized. The opening starting balance of that company, what is asset, what is liabilities, it will be journalized, it will be equal. Next, closing entries. At the end of the year, the profit and loss account has to be prepared. At the end of the year, in the end of the year, you have to prepare some profit and loss account to know what is the position of your company, as you know. So for this purpose, the nominal accounts are transferred to this account, and this is done through journal entries, that is called closing entries. So for that purpose only, the nominal accounts are transferred to this account, and this is done through journal entries, and journal entry it is called as the closing entries. Next is rectification entries. If an error has been committed, it is rectified through a journal entry. So if an error you have been committed, then it is rectified through a journal entry. You can rectify that error, what error has been happened. Next, transfer entries. So if some account is to be transferred from one account to another, the transfer will be made through a journal entry. So if you have to transfer, if some amount is to be transferred from one account to another account, so if some money have to be transferred from one account to another account, the transfer will be made through your through a journal entry. Through a journal entry only you can make that transfer to that company, to which company you want to send that money. Next is adjusting entries. At the end of the year, the amount of expenses or income may have to be adjusted for amounts received in advance or for amount not yet settled in cash. Such an advance is also made through journal entries. Like adjusting entries means in the end of the year, the amount of expenses, how much amount of expenses or income may have to be adjusted. How much amount of income and expenses you have to be adjusted for amounts received in advance, for amount that you have received in advance, or for amounts that not yet settled in cash, that you have not settled it for cash. Such an adjustment you have to be made through journal entries only. Usually the entries pertain means it has certain following rules, like outstanding expenses incurred but not yet paid, and another is prepaid expenses, means expenses paid in advance for some period in the future. For some period in the future you have to pay advance. Interest on capital, in interest or proprietors investment in the business entity investment. And next is depreciation, fall in the value of the assets that are used on account of wear and tear. These all are something where general entries can be made necessary. Next is entries or dishonor of bills. So if some who accept a promissory note or bill is not able to pay in the due date, a journal entry will be necessary to record the non-payment or dishonor. So see, if a company they want to give some bill, means money to your company, but they are not possible to pay that in a due date, the date that you have given them to pay. So a journal entry will be a general entry will be very much necessary for you, so that you can record what all the non-payment bills happened by them or dishonor. This you can record. Next is miscellaneous entries, means credit purchase of the things other than goods, delight in or materials required for production of goods. These all the following entries will also require journalizing: the credit purchasing or material required for production of goods, an allowance to be given to the customer, or a charge to be made to them to issue some invoice, and receipt of promissory notes or issue to them if separate will books have not been maintained, on an amount becoming irrecoverable, say because of the customer becoming insolvent, or effects of an accident such as like loss of property by fire or transfer of net profit to capital account, like this, or the some miscellaneous entry. You can write the following entries will also require journalizing. These entries require some of the journalizing. Illustration they have given is on date 4/1/2020 debit notice 101 till date 9/10/1/2020. So on 4/1/2020 they have returned to Goyal Mills, Surat 5 polyester sarees at the rate of ₹1,000. Means one polyester saree is ₹1,000, 5 means 5,000. Okay. 9/1/2020 Garg Mills Kota accepted the return of goods from us for 5 Kota sarees of ₹400. So that you have purchased for cash for 5 so for you have purchased 5 from Goyal's Mills. You have purchased 5 polyester sarees ₹1,000. In 9/1/2020 you have sold it to Garg Mills. They accepted the return of the goods, and for they asked 5 Kota sarees for ₹100 will take. Now 16/1/2020 102 notice return of Mithal Mills, Bangalore 5 silk sarees 2,600. Return of in 31/2020 return of one computer, that is 35,000. See, so now debit is January 4th is 101. So Goyal Mills Surat you have given 5,000 purchase return. So 5,000 is the return amount, purchase return. Here you have written 5,000 means 5,000 is the returned. You have returned to Goyal Mills first. Next January 16th you have returned to, this is not return, it is purchase of goods for cash. So in January 16th you have given 13,000. Okay, so for 13,000 you have means you have returned to Mithal Mills that sarees, 5 silk sarees 2,600. In January 31st, at the end of that year, means that month, you will get 18,000 is the total amount you have to you have returned. Okay, like this you have to make. So okay friends, this was your chapter, the subsidiary books. So I think you understand this chapter. So if you like the video, please give a like, come on my video, please give a comment and subscribe my channel and Quick Center for more video. I will see you in the next video. Till then, take care.